All right, traders, I am back again with another video, and on this video, we want to look at the euro pound, quite possibly a trading opportunity here. As we could see, the market basically is in this range, in this period here, we were ranging right here. All right, so what I'm looking at now is this point where we came from here, bounced here, came back down to the level, back up, didn't quite get back down, but then we came back up to this level. We're showing a lot of up volume, but the market failed to go up. And you could see the rejections at this level. Rejections are major. So on the daily time frame, when I get a rejection like this, I trade the level. So just looking at this level, now I'm going to put an entry order at this level. And I kind of want to be below this candle right here, the second candle, because we have two rejections here, one here, two here. So I'll let the market trigger me into the trade rather than just jumping in here. But what I'm going to wait for now, if this candle closes as is, or either or, this is my level. All right, so I'm pretty much at 0.88336 because I want to see the market drop below this point, which would trigger me at this level, but it has a possibility of closing below this this low of the current candle. All right. And if it doesn't close below this low, which is another, I think we got another 3 hours to go on this. If it doesn't close below this low, then the next thing that I'm going to wait for is for it to, if it doesn't close on this candle, I'm going to just let it go. I'm going to leave my entry there. Now, my target quite naturally is to shoot for the bottom of this zone because the range, we're in a range, and I want to see the market get back down to that level. So I'm going to range trade it back down to that level. But we may not get to that level. So I pretty much want to monitor my trade. In a lot of ways, I monitor the trade is, so the market's moving up here, all right, and you got a lot of spikes here you could see, so you got to be careful here. Big spikes here on this euro pound. So yeah, very big spikes, and you can see what these spikes mean pretty much too. So if I look at like this last spike here, even this level, you could see where the market spiked but never could go higher than the spikes, all right, and then dropped. Then the market was here, couldn't go higher than these spikes right here, this main spike. It came up into that zone, but then it failed to violate that level. So now you had spikes here, and then the market went higher. All right, then you have spikes here. I don't, based on the way the market moves with this pair, I don't see it just violating this level. I see it first violating this point and dropping to the downside. So we're going to trade to the downside. We're going to enter short here to the downside. If I go on my 4-hour time frame, I don't really like it as much. I don't like the setups as much. Yeah, basically have bull traps here. Market getting trapped, another bull trap, and then the drop. So yeah, this is kind of scary here. So even on this 4-hour time frame, if I was trading that, I just would trade the close below this level. So I could trade the 4-hour close below this level or wait for the daily close below this level. Not the close below this level, sorry. I wait for the market to get to this level. So really it doesn't matter what time frame I'm on because I have a level and I'm going to trade that level. I put my entry order at that point. Now, most likely, you definitely got to have your stop loss up at this point. If this is too big for you, then cancel the trade off. Don't even do it. If it's too big for you and you can lower it, lower your risk with some lot size, then lower your lot sizes to lower your risk. All right, and then you could try to get into this trade. Now, if you can't get in either way, then you can't take the trade. Some trade setups aren't meant for you to take, even if they're great setups. They may be great for someone else, but not great for you. All right, they may be bad for me, but great for someone else. So this is the entry level, shooting for this target, but we always want to watch as the market goes up. You could see the same thing will happen when it comes down, but it starts to form these indecision candles. You want to put your stop loss below. So if the market comes down, triggers you, and then slows down, shows indecision, put your stop loss above the indecision level, and then try to trade. Try to use that as your stop loss and see if the market comes back and triggers you. But with so many spikes on this pair and the way it likes to spike, look at these spikes. I mean, they look like they hold true quite often. Could see spikes here, spikes, spikes, and then the market drops. Um, I don't see anywhere where the spikes didn't hold in this whole area. A spike here and the market went higher. Spike here, we went higher. Spike here, we drop. Spike here, we drop. Spike, we move higher. Spike, we moved higher. Spike, we dropped, came back, and then dropped. Spike, we dropped big time. All right. So these spikes are just rejections. When the market rejects these levels, so far on this pair, I haven't seen too many times where it wasn't really honored. All right. And a lot of our setups seem to work with this pair. If you look at some of them, because you have a hangman here, market drops. Now, I wouldn't trade it because it wasn't at my level, but you could see some of these things just really work for you. You got a bullish engulfing too big, way too big. All right. 3 inside out, but the market was too big there. A lot of our trade setups look nice on this asset, on this pair here, and I'm going to do the exact same thing here. I'm going to wait for this setup no matter how long. If the market never violates this level, I'm always going to look to get into the trade. So if the market can go up there, now this is where I can walk this zone. Someone else was asking me about walking the zone. The difference is twofold. First of all, this I'm going short, so my risk is only going to be up to the top here. All right, so if this was the resistance point right here and it was a zone, first of all, my risk is now from here all the way back to here plus where the zone ends. But being that the body closed right at my support level, at my resistance level, right, then my risk is only this point. All right, but my risk would increase if the support and resistance level was up here. So if the resistance level was up here, my risk increases because the market could move higher than that because it's more than likely a zone. All right, so how you would zone walk is this one you could have zone walked. I would have to go back. But this one you could have already entered a zone walk trade because once you get a wick like this, especially this, what you do is you look at your zone, and the wick is your zone basically because I'm going to mark the whole support and resistance zone for you. This is the zone. We have our entry here, but when the market moves up here, so as the market starts moving up, you could have taken this entry level and moved it higher into here to cut the risk down. So as the market moves higher, you now move this up higher. All right, and if the market goes up in here, you get up halfway into the zone, and then it eliminates the risk because this is only your risk now. Now suppose this was the zone, right? And the candle pierced right at the top of the zone. I can't zone walk that because all I'm doing is zone walking back to some resistance, and then I'd have to still go back into the zone here. So I don't want to do it like that. It needs to be on the body like that. Well, the support and resistance level has to be on the body like that, pretty much like it is right now. Move that right there. So that's when we can really zone walk it. All right, and you just moving you're letting the market trigger you back in. This way you get in with the momentum coming back towards your trade, and that's why I like to do a zone walk and explain it a little better on another video, but I just wanted to do a quick take of that. But that's the euro pound. I'm going to stay on the daily time frame because it doesn't matter. Just set your order for that level at 88.330. I'm at 88.336, and we're going to set a target for here, and I'd set a target, but I wouldn't set the market to trigger me out. I'd set an alert here. Because if the market gets here, I want to see if we can violate this level and go to the downside. That way we can move our stop loss from wherever it is down to here and let this be a free trade, and we know we made all this profit, and then let's see what the market gives us even more. So we're greedy, right? That's what we want to be, but we want to be smart when we're greedy. All right, so this is what I'm looking at. I like this opportunity. The rejections are good here. They show strong on every part. Now, even though we see what happened in the past, doesn't mean that's going to happen in the future, but that's what holds strong for our probability. So euro pound range trade opportunity with these big rejections. All right, hope this helps you out. Until next time, have a great one. God bless.